So moving on to competitor analysis, right? This is where you start to look at what else is out there that is solving the challenges that you have identified in your value proposition, so to speak, if we were to use the particular tool. So what are the pains or the gains that are being accrued to farmers or to your target segment through others? What other services are doing it now? They might be doing it in a very similar way that you are solving for it, for a problem. An example, let's say if you're giving advisory services, there's two different apps that are providing farmers with tips on a daily basis on, this is how you should be planting your wheat, this is the spacing that you should use, or so on. And they're providing them with weather alerts. That's fine. That's, direct competition. Both are doing very similar things to address the core problem, which is farmer information or knowledge. Or there might be indirect competition, which is solving the same problem with a different product or service, right? So an example could be the Plantix app for that, which uses AI and machine learning algorithms. And basically what a farmer does is takes a picture and, gets recommendations. If they have a disease on, if their crop is facing a disease, they can take a picture, and then the app will tell them what is the likely disease that the plant is that the crop is facing, and what is the remedy for it. And it will give you a few options as well. So now those are two different ways. One is just give farmer general advice on how to solve for pests and diseases. The second is for them to take pictures and do something and so on. And the third one would be extension agents, right? So let's remember that all the competition does not only happen in the digital world, it also happens in the physical world. The core problem remains the same. The core problem is farmers lacking knowledge on how to handle pests or diseases. And there may be many different ways of addressing that. So all those different services that are either directly or indirectly solving for the same, for those same problems, that is your competition, right? So either direct competition or indirect competition. Those are two things that you can be looking for. Okay, so in terms of the in terms of the that competitor analysis, the point I want to make over here is do an honest comparison. Highlight that this is where the competition is stronger. This is where you are stronger. And where the competition is stronger, it helps you build a better business model. It helps you plan for the future. How are you going to get better at that? Or do you even want to compete on that front, right? So then the reason this competitor analysis is important, it is because it understands the elements on which a customer is making a decision, how you stand out from the competition on those elements, right? So you've already done your customer analysis beforehand. You've already understood the customer's pains, their gains. You've done some discovery interviews. You have gotten a decent understanding of your customer by the time you are at this point, right? So this is where you can start to identify what are those differentiators that customers look for, that your customer segments look for when deciding on what product or service will they use. Could it be the brand, the features, the quality of the service? Is it easy to use, and so on? Could it be the price? Uh, and price is not just a factor of is it high or low, but it's a factor of, is it transparently communicated? You'll see some financial service players, for example, now increasingly focused on transparently advertising and making sure that their pricing is known, so that, yeah, and that becomes a differentiator. Okay, we're going to charge you 2% more apparently because others are charging 2% less on their advertisements. But then that is all that we charge while others have hidden fees, right? So price is not just about um, low or high. It's about the visibility that you create. It's about the fairness. It's about making sure that it remains consistent over time. Now, consistent over time again does not mean that you have to stay at the same price. It means that your broad policy remains consistent. Whether that is to say, if we are committing a price to you today, that is the price that you will receive a month from now, and that month is for you to make a decision, then you have to stay consistent on that, even if a month from now the new price that you're offering is higher for whatever reasons, right? So that consistency is important. It could be service, that your customers are making decisions on, or it could be the experience. It could be within the experience. There's some very minor elements on paper that become very important, like emotional factors. You know, in farming, the one example that I can think of, and I've heard this from so many farmers, that we go to this arti because our father used to go to his father, and our grandfather used to go to his grandfather. So this is just a relationship that we've had over generations, and that's something that we're going to work with, right? So when you start to understand those elements, you start to understand how difficult it is going to be for you to break that break into that market. But it also helps you start thinking about how you can do it, because you understand the level of complexity, the level of difficulty, right? So don't underestimate the experience or the emotional elements alongside that. On experience, to be fair, you can also, and this is a mix of product and experience, but um, you'll see a lot of services that have repeat users, a lot of products that have repeat users, because getting back into the service is very easy, right? Um, and again, I'm dating myself a little, but if you start going back maybe 10 years ago, a lot of mobile applications would require you to log in every time you went back in, right? So you use the service, okay, great. Now 2 hours later, you're opening that app again, you have to log in again, right? It became a major experience pain point for people. It became a major product usability pain point for people. And so, uh, over time, a few started with this auto kind of feature, and then slowly the ecosystem has evolved in a way that if you've logged into a service, you're pretty much gonna stay logged in to that app. And now you see that as pretty much an industry standard, right? So it's not a differentiated offering today, but 10 years ago, it was a differentiated offering where it was happening. Now, the other thing is, you typically, especially as a startup, especially as a young organization, you might not be able to compete on all of these fronts. Even as more established organizations, you may not be able to compete. But as a startup, it's very difficult to compete on every front. So you have to pick your battles, and pick the battles that you know you are better on, and that is where you build your value proposition around. Now that value proposition, that competitive advantage that you are creating for yourself, it could come from a number of different factors, and we've covered this earlier when we spoke about value proposition, so I won't go into detail on this. So you'll have these slides, but think about these elements. Think about how these different elements help you create a competitive advantage for yourself that is genuine, that is well thought out, and don't be don't be too worried if you are not competing on every metric that you can think of. You don't have to. You have to create your differentiation. You have to create an understanding of where you are good and zero in on that. But that has to always come from your earlier work with customers and understanding their pains and gains. So that is how all of this kind of links back to what we've been doing in the previous level ups, right? Um, Now, com- competitor analysis on the face of it, saying it is one thing. Okay, we're going to do competitor analysis, right? How are you actually going to find the information that will help you um, build a good competitive scan that will help you understand your market better? Right now, this will require effort. This will require time, especially in agriculture. This will require um, physical movement from point A to point B, and to meeting customers, and to meeting potential customers, uh, and the ecosystem around them, right? But you can start off with your secondary research, and your secondary research will come from a number of different can come from a number of different sources. You know, we've already discussed. Academic publication. Patents may be less relevant to the Pakistani context, but if you are in a very high tech space where patenting data is available, then yes, definitely look for that. You'll also start to see, you should also be looking through advertising, through sales brochures, through newspapers, through websites. You know, there's so many different sources that can help you get information on customer websites, for example. um, if your competition has a website, it will give you an idea about their product offering, right? They might have a demo, an option to demo the service. Use the demo. If you're in the mobile app business, download your competitors' apps, go through them, experience them, right? All of this is secondary work that you can do well. The experience itself is primary, but the rest of it is all secondary research that you can do to make sure that you have a good basic understanding of your competitive structure. But then it's very important to go out again and to talk to your potential customers and understand um, what how are they solving for that pain point that you have identified. And just an answer that there is no solution is not the ideal answer, because most things do have a solution. It might be a more painful way of getting to that solution. It might be a more expensive way of getting to that solution. It might be that that solution is not readily available or not on demand, and so on. But there should ideal in most cases, there would be something that is solving for that pain. So talk to your customers, do that primary research, understand how they are solving for that problem. One example that I often give, and I won't be surprised if I've shared this with you before as well. um, when you talk to a lot of banks, you will see that when you ask for their competitive space, so when they are presenting their competitive space in agriculture, they will list down other banks, they will list down microfinance institutes, they will list down potentially some NGOs, um, when it comes to access to credit. But I have only met one or two banks who have listed down the Aarti as their competition for financial services. And if you were doing enough customer discovery interviews, you would see that that is a major source of credit in the country, right? So when you are aware of that information, when you've mapped out not just who the competition is, but also what their offering is and how it differentiates from your offering. And this goes back to that honest assessment. you can start building products that are not only in line with the customer's expectations and their needs, but they also are better than what the competition is offering. So in this case, it might mean, an RT is offering farmers access to inputs on credit, for example, as and when they need, but also access to emergency cash as and when needed. So for the emergency cash part, can you build a running finance facility for farmers unsecured, because that's how RTs operate? Unsecured running finance facility for farmers that um, that provides them with a similar benefit. And in that case, they don't actually have to go to someone and personally ask for money, which at an emotional level is a less convenient experience. And so, this is money that is available to them and they can access it when they want. Um, so a few ways that you can actually build your competitor analysis or your competitive landscape, so to speak, or understand it, right? This is a quick 2x2 that I did based on a few services in the digital in the agri e-commerce space, right? And it's a basic 2x2. On the vertical you see the strength of the relationship with your buyers and sellers, um, because on the e-commerce platform you need both. So the strength of that relationship or the commitment involved in that relationship, and on the horizontal you see niche audiences, very limited focused audiences versus more mass market general approach, right? So how would you go about doing this? Now this competitor analysis is built from the perspective of an organization that wants to build a agri e-commerce service based out of Africa, right? So if you want to build that, and you will, or let's say they have a very early prototype of that service, with that, how do you compete? How do you build your competitor analysis? So if you look here, if we start here, this is Vitak Farm Fresh, which is basically a standard model that kind of connects smallholders to individuals and businesses. But it's limited to one province in South Africa. Granted, it's a province that has two big cities, Johannesburg and Pretoria. So the buyer side is quite big. But again, it's also only focused on fresh fruits and vegetables, right? So limited geography, limited value chains that they operate in. So pretty much a niche audience that they are targeting. But their relationships with their farmers are evolving from a point where they were very informal, like farmers just had to register and then they could start selling to them, to a point where they are putting in place agent networks and so on, so that there's a direct line of communication with the farmers and there's a more committed relationship. An even more committed relationship example is from Zambia, which is Lima Links, where it's a very similar model, but they partner with outgrower schemes, right? So outgrower schemes you can think of as kind of farmer cooperative kind of organizations that you can set up, that exist already, and they're partnering at that cooperative level, right? And that helps them get into more formal relationships with their sellers, right? On the buyer side, because they're also more focused on the B2B side, they have longer term agreements with their buyers, and that makes a more committed relationship. So you see them higher on that chart. Then Faminera is basically like a service based out of Uganda, where the primary focus is a classified section, so to speak, with where farmers can post their produce, and buyers can kind of buy. Think of it as an OLX style service with a bit of a payment option integrated into it as well, right? A digital payment option as well. So they are on both sides. So it's a uncommitted relationship on both the buyer and seller side. And then it's a niche audience because it again is limited to very few value chains at this time. They're kind of trying to focus on exportable crops as well. So, niche audience. But what they are doing as a business is getting into B2B relationships with committed buyers. So if they start to get into that, you'll see them move up this vertical axis, so to speak. Compare that to Twiga. Now, Twiga is one of the biggest agri-tech plays in e-commerce, massive valuation. And they have very, very strong buyer and seller relationships through longer term contracts. And so, very committed relationships, serve the mass market, very general audience, and they do that. Now, this service for which we are building this competitive landscape is based out of Africa. And all of these services that you've seen are based out of Africa, right? And this service wants to go pan-Africa, so they're looking at all these different markets. Twiga is based out of Kenya, by the way, but operates in a few other places as well. But you see, they've also put, or we, as an example, while building this, have also put Ninja Cart in there. Now, Ninja Cart is based out of India. Very large partners like Walmart, Flipkart, so on. But the reason they're there is because in that secondary research, when you look at newspaper clippings, when you look at shareholder, not shareholder, the annual reports and so on, you see that they are talking about the possibility of moving into Africa. Now, the importance of including them over here is they are a potential competitor. They're a massive company coming from a massive market like India, already achieved scale, and now looking to move into Africa. Whether they've done it or not isn't immediately relevant, but having them here helps you identify what your future element also looks like. And finally, you have AgroCenter here as well. Wanted to give an example of uncommitted relationships and general audience, because AgroCenter has an agro-trade platform that provides farmers with an opportunity to sell to agents through like a quality assured e-commerce service, right? So yes, the audience is more general. They're going for mass market produce and so on. The relationship on the agent side is relatively committed, but on the farmer side is far more open. So anyone can kind of go in and get their produce quality assessed and so on. The point of highlighting all of these and highlighting these different models was that when you're building a service, agri e-commerce in this case, there can be very, very different ways of delivering the same service, right? And when you start to build your competitor scan, you start to see how all these different competitors can go in different areas, right? Now, the reason I've spent more time on this 2x2 is because it's great for early market scans, and it is where a lot of you guys are at this time. So I wanted to focus on that. But when you are in a slightly more, you can start building this even now. But maybe look at the timing on when you have enough information to start building this. But you can build multifaceted tables for your competitor analysis as well. And why this is better than that basic 2x2 that you saw above was because now you are comparing them on not just two variables which are more qualitative, but you are comparing them on a number of different variables that you feel are going to be important for your customers, that you feel are important for your investors when you are making the pitch and when you are making the case for why your company is standing out from the competition, right? And when you're doing that, you can go into a number of different variables as you see over here. Compare all your competitors. So this example comes primarily from the communication space, and so you're building towards that. What investors often value um, more than other elements is obviously the market or the customer fit, which we've covered in the past. They value the business model. The business model is where you start to look at, um, do you have a freemium model? Do you have a paid service? Do you have paid only? What kind of sustainability elements do you have built into your model? They obviously value the price point, and how you stand against competition on price point. Um, if you can highlight value added features like, yes, we do this, but we also provide other services. So let's say primarily we are an agri e-commerce service, but we also provide, primarily we're an agri e-commerce service for outputs where farmers can sell their output, but we also provide connectivity to the input side. So now they start to see that, okay, there's more to this service. Maybe that side is not fully developed, but they're building that ecosystem. It might be about, we have a full agent network that basically provides farmers with a physical touch point beyond the digital side only, right? If you have any unique offers or features or functions, basically the moat that we spoke about earlier, but drilled down, think of this as the moat for very specific operational bits, right? So what is it that stands out on your service? And if you have things like things that show your customers feedback, that will always be valued a lot. If you have independent verifications of that, independent validation of that, that will be amazing. But if you have, even if you lack that, uh, you know, um, your own internal NPS or similar ratings might work. If you have an app and you have user ratings from Play Store or the App Store, that would be amazing. Um, and then you have certain services that are multifaceted, right? So they don't just play in one area, they play in a number of different areas. And across all of those different areas, they will have different competitors, right? So in those cases, the petal diagram becomes very interesting because it gives you a summary picture, and then you can kind of think of each of these petals as something that you can go back and build the detailed table for. But this is your summary version where, if you see Slack as an option, right? Now Slack does a number of different things, right? It helps with real-time collaboration where video calling or audio calling, and you see a number of different services that do that. Skype, BlueJeans, Join Me. It helps you with online file sharing. Again, Dropbox, Google Drive, number of different services doing that. It helps you with single points of communication, something that Microsoft, for example, does a lot of. You would have heard of Teams, and Teams is integrated a lot into a lot of other different Microsoft offerings that help for that unified communication. It helps you with task management, right? So on the task management side, if you use Trello as an example, this was something that we mentioned in the tech stack discussion that we had during Level Up 3 as well. This is so you have competitors in that space, and then of course business communication chat. You have a number of different offerings. WhatsApp, something that you would all know. And then at the intersection of this, very much like the Venn diagrams, you'll see some services that already do 2 or 3 of these things, right? So you can build intersections for those petals to try and understand where that competition is. And those intersections may be stronger competition because they are multifaceted and they are providing different services, just like you want to, or just like Slack wants to in this case. so yeah, that's something that that you can work with, right? The key over here is always that whatever element you are choosing, whatever tool you are choosing, um, is based on the realities of your business as well as the realities of how much information you have. So the more time and effort you are able to invest in your competitor analysis, the more detailed you are able to make it. Now, I mean, we've spoken about building an unfair.
Ahmed,
Yes, please.
sorry, can I please just add to that petal diagram? Because
please go
it's
ahead.
a really good visualization where there are clear groupings, because often it's really easy to understand and kind of see those groupings in technology stacks, because there is usually a prerequisite such as the underlying what's it called, platform. So if your customer is a committed Microsoft user, then there's a grouping of well integrated options, and they kind of sit together as a separate, distinct, community or bundle that buyers typically go to. And so you can explain to investors, or you can explain to customers how you naturally either straddle those prerequisites. You might, do something better than all of them have done to date, and they've been crying out for that. So this is really good to understand how you can start to visualize where we sit in the options that you have, and how you will help your customer solve their major pains as well, and then what they gain. So, through here, you can see that Slack says, well, we can sit and work with all of these. So you might have invested in building a technology stack that's based around Microsoft. And so you use GoToMeeting, you use Citrix, you use Skype, but Slack can also help you work with customers that don't, and it can access all of these. It's the same as in agri-tech. If you have a technology provider that has a really strong presence in your market, so you think back to your ecosystem map, if you know that, for example, that John Deere is the prevalent machinery type in this particular area, and you want to create IoT that works with John Deere machinery, you're going to need to show that you can work with that, or that you can bridge the gap and give your customer all of this extra access that's never been possible before. So petal diagram is very useful to kind of marry up your customers' pains and gains with where the current market sits. So it's a really useful diagram once you've done your research.
Yeah, absolutely. Absolutely. Thank you for that, Lisa. So just the last kind of point on competitor analysis, and we've spoken about unfair advantages in the past as well. And this is really where you want to focus, right? Your unfair advantage is something that cannot be replicated very easily, right? So there's a number of different ways in which you can build that, or the number of different unfair advantages that you see in different markets, for example, and drivers for that. So it could be driven by domain expertise. Domain expertise could be hospital systems, because they're very complicated, they're regulated, it's a very regulated industry, a lot of potential rules to follow and so on. So if you have deep domain expertise in building hospital systems, that's something that is difficult to replicate. It can't be bought. Similarly, it's one thing that really stands out. It could be that one thing that really stands out. For example, Google's algorithm, Google's multiple algorithms, and it would take time, and it cannot be done easily. Similarly, authority can be a source of that unfair advantage. If you have an existing brand, an existing market name that is very, very established, it becomes very difficult to overtake that. However, always keep in mind that that can also be a bit of a challenge. So in the US context, for example, it was very commonly said at one point in time, just Xerox it, instead of photocopy it. The brand name was so common that everything was just Xerox it, right? So it was, competitors would enter that space, and even if you were using a competitor's machine, a customer comes in and says Xerox it, you're still using their machine. The brand became the market name for the service. An example of that from Pakistan would be, yaar ye easy paisa kar do jate, right? So now easy paisa is not the only service that operates in the country. There's a number of other services, but it became a brand. It became the market name, right? So it's a delicate balance to strike on that. But if you back that with a strong reputation in the market, so not just the brand, but a strong reputation in the market, that is where the unfair advantage stems from. And then, of course, your team can be a massive unfair advantage. More than anything, you will see investors invest in the founding team. Often the co-founders, but if you have, a layer of leaders in that team as well, that they recognize have a proven track record of success, you will see more willingness to invest in those markets. And this is something that you will see if you look at the fundraisers that you have seen in Pakistan's digital ecosystem over the last 3 years. You will start to see that a lot of those founders and co-founders came with that background, came with that either the background of having scaled startups themselves, or coming from a startup environment that had scaled, or they had put together a team that showcased that ability. So